Aloha, I'm Juliet Leiter, and welcome to another edition of PTC TV, brought to you by PTC'16 Platinum sponsor Equinix. This is the last of 5 programs specially created for PTC'16. Mahalo for joining us for PTC and PTC TV.
Aloha, I'm Sharon Nakama. Thank you for joining us on PTC.org for the final installment of PTC TV for PTC'16. Please enjoy the video of our Wednesday keynote sessions and our awards luncheon. Mahalo for tuning into PTC TV this year, and I look forward to seeing you at PTC'17 from January 15th to the 18th. Ahui ho!
PTC'16 is made possible by the generosity of the PTC'16 sponsors. Mahalo to each of the Platinum sponsors.
The cloud. It's changing the way we do business. Push the limits of innovation and enter the cloud into our secure, intuitive, and responsive ecosystem. With our subsea network spanning the globe, we deliver unsurpassed coverage into the world's fastest growing markets with flexible and scalable solutions. We are a technology company that sits at the crossroads of where the future clouds will migrate. Global Cloud Exchange. The cloud revolutionized.
Our data center interconnect technology is perhaps our greatest ever technical achievement. Available in both a 4 and a 12 rack unit configuration, it features the industry's first 400G single line card and delivers a total of 50 terabits per second throughput. Our Cloud Connect platform is a vivid realization of what can happen when great vision and great technology coalesce.
In today's first keynote, Jonathan Atkin leads a panel discussion examining factors that could drive investments and M&A activity in 2016 and beyond across the Asia-Pacific region.
So good morning. What I'm going to do, and kicking off this finance and investment panel, is have each person give just sort of a brief self-introduction, and then I'm going to hand it off to Tim to kind of go into a little bit more of a deep dive and kind of big picture overview in terms of what he's seen in terms of the investment landscape. But Tim, and then Rick, and then Tony, please just kind of briefly describe your role.
Great. So I'm a stock analyst, follow the communications and cloud. I've been doing this for 20 years. So a broad range of the large carriers, AT&T, data centers, towers, some of the managed service providers. My background was more on the civil engineering, construction engineering side, so I feel pretty comfortable with the infrastructure side of things. I've been learning a lot more on the applications over the last kind of 10 years of doing this.
I'm, I guess in a nutshell, a child of immigrant farmers from Eastern Europe, and by fortune of education and experience, somehow I've managed to be associated with a lot of transactions in the technology, media, and telecom space for the last 2 decades. And I spent the early part of my career at Bear Stearns and co-founded with some colleagues a firm called Bank Street, which remains focused on the technology, media, and telecommunications and internet infrastructure arenas. Our collective experience spans multiple decades on average, and includes an experience base of probably $500 billion of transactional experience over the course of our careers. And we feel very fortunate to have the opportunity to continue to morph through what is a never-ending, changing, and very exciting industry.
So public markets, M&A, private equity. Tony, what do you do?
Yeah. Good morning, Tony Lynn from GI Partners. GI is a private investor in middle market asset-based companies, most well known at this conference for investing in a number of data center operators, Digital Realty, Telex, Peak 10, and BioWest, to name a few. That's the private equity side of the company. I sit on the real estate side of the company, which is relatively newer but growing, where our mandates include a number of investment platforms, including industrial, multifamily, and again, most relevant here are technology advantage properties, mainly data centers, where we deploy capital under 2 mandates for 2 very large institutional investors across the US and North America.
And I think you left out SoftLayer, which is now owned by IBM as well on the cloud side. So Tim, you interact with investors every day. What are you getting asked about most across all the different sectors that you cover, and what are some of the themes that you're talking about for 2016?
Well, first, I think this is a great sector. There's a lot of volatility, a lot of change in technology, a lot of regulation changes, a lot of changes to the industry structure. But there's also a lot of confusion. I got a call from a client this morning who was like, wanted to understand Amazon and what does it mean for data centers and fiber providers and the whole industry. And that's kind of a fairly typical call. I'm sure you get them all the time, Jonathan. And I try to start and pull back with investors, particularly if I'm talking to portfolio managers that are not really deep in the industry, and explain the long-term trends. To start out, because generally those long-term trends have been what's been driving the stocks over the last 5, 10, 15 years. And clearly everything's moving onto the internet. It's enabling the applications to become separate from the underlying network. And this in many ways creates a lot of competition and new entrants for the communications providers and cable providers. And when you have a more competitive industry, those industries are usually structured along more horizontally segmented lines. And companies that do real well are either focused on wholesale and infrastructure, or they're focused on enterprise sales and marketing with applications, or the consumer market. And I think the classic examples are kind of American Tower and Equinix, and more recently Zayo on the fiber front. On the enterprise front, it's something like a Salesforce.com. And clearly consumer, it's up in the air, but something like a Facebook is obviously doing, incredibly well. We see 5 components of infrastructure: spectrum, towers, fiber, the data centers, and the computers inside the data centers. Amazon Web Services has obviously the computers inside the data centers, but I frankly look at all 5 of those components a little bit more real estate-like, and the reason they should frankly be, and I believe they should be frankly a form of shared infrastructure. A different type of financing, usually more debt financing. Usually most of these segments are becoming REITs, so they don't have to pay taxes longer term. And the shared infrastructure just lowers the overall cost for the industry. And that really has been the key for the industry, is to be a low-cost provider. That's how you get, and if you are the low-cost provider with unique infrastructure or unique applications like Salesforce.com or Facebook, and there are many others with unique applications, you can get very, very high returns on invested capital. Luckily, Amazon, not a lot of people understood Amazon Web Services. It was mostly followed by analysts that follow the commerce side. So we tried to do a deep dive about 2 years ago on what the business model actually looked like and what it was valued at, and it was a pretty good anomaly on the valuation front there for a while. That's obviously gone away relatively quickly. So that's just the high level backdrop, and frankly, it's a very organic process. We don't really know what AWS means for the whole industry. but I do think they are stimulating an awful lot of competition, an awful lot of new applications, driving a lot of usage on the overall networks. We think, frankly, a lot of this has been enabled by mobile broadband, mobile broadband networks. But the fact I follow seven different segments of the market, I get questions on everything all the time.
So just spectrum being another pillar, and then I'll hand it over to Tony to talk about data centers. But there's spectrum auctions that are coming up. I think end of March, the broadcasters are giving up some pretty valuable licenses. And who do you see as participating in it, and any new business models or investments that you think are going to occur in the wake of those auctions?
Great question. I think the million-dollar question for the large carriers are, do the cable companies enter the wireless business? If so, how? Or even does Apple enter the wireless business as an MVNO? I think that's the key strategic question. So what we don't really know is if Comcast or the cable companies are going to aggressively bid for spectrum and try to build out on their own, or Google, or will the spectrum end up with existing carriers? And ultimately, I think if it does, I do think cable will enter the wireless business in some form or another. So we believe that T-Mobile will get acquired at some point by Comcast. I don't think the cable companies will be real aggressive in the auction, but it's a little difficult to tell at this point in time. But there are a lot of wild cards as Google show up. Sprint said they're not going to bid on the spectrum, but does a SoftBank affiliate bid on the spectrum? Because the spectrum is frankly most valuable for T-Mobile and Sprint because they need coverage and better in-building penetration to be more competitive. AT&T and Verizon do not need it as much. Google and Apple, we don't really know what their wireless strategy is going to be longer term. I'd be a little surprised though if they went and bought spectrum aggressively and built it out aggressively.
Great. So Tony, a lot of data center M&As happened the last couple of years. There's some assets in the market, and any kind of broad read that you have in terms of both domestic and international perspective on what's being sold and what you've observed in terms of valuations.
Oh, sure. Well, I think I would start off by saying, in reflecting some of the comments that were just made about being the low-cost provider in more efficient deployment of resources. I mean, that's really the whole reason why we came to be, is that we started a platform that invested as a landlord in data centers, because what you're seeing in that space is, of course, things becoming more competitive, more M&A happening, consolidation happening, a great need for more efficient deployment of capital, and that includes also shedding capital from assets that probably aren't as productive in really the view of the investors of these companies. So the reason we came to be, of course, is that we invest in these data centers, and we can allow these operators to take that money that they would otherwise put into properties and put it into their own business. So I mean, I think what you'll see is you're certainly going to see a lot more consolidation. We've seen that over the last year and a half or so, including just a notable one that just happened a week ago that just finished up, the Equinix. But we're seeing more of them. We're seeing more international plays as well. And you're also seeing more combination of strategies where you're seeing wholesale and retail being put together, hence DLR and Telex. We see ourselves as the beneficiaries of that, but we also see ourselves sort of as, kind of the grease for the wheels of these companies being able to continue to grow in the way they want to grow.
So telcos in particular, currently are there was a wave where they were buying data center companies or buying hosting operations. There seems to be a little bit of a retreat going on where they're now divesting of some of the assets. Any perspective on who the logical buyer, what types of buyers that you would find? Would they be strategic or financial?
Well, I think you'll probably see more buyers like us out there, frankly, and you already do. There are a number of REITs out there, and I don't need to name a few. I think many people know who they are, that already invest as landlords in the business. Some of them operate and sell cage space or rack space, but others don't, like us. And so I think you'll see more of that. I think the focus of a lot of these companies at this point really is on more of the mature, sort of core data center play, where you have a strong credit company on the lease, and in that way you can get the interest of major institutional investors to actually deploy that capital. But I think what you'll see more and more is interest in the sort of downstream, if you will, or just moving over on the risk spectrum towards more value add and even opportunistic plays.
Great. And then, either including data centers or moving beyond data centers on the M&A theme, any perspectives from your side?
Sure. Well, look, I think on the data center themes, it's interesting to sort of watch the waves that you identified with carriers of all different flavors sort of moving into the space in a big way about 5 years ago, and now seemingly about facing on strategies that weren't that long ago. I think part of the specialization that was just described is contributing to that in a meaningful way. I think there is a significant demarcation between those that are making very efficient the property aspects of the business versus those that are playing out strategies within these facilities. I think for a period of time, folks were beginning to think that carrier neutral solely was the strategy. I think increasingly you're also seeing that tested and challenged with folks that say, no, it's perfectly viable to have a strategy that combines a connectivity solution set with a facility. You're certainly seeing Zayo play out that thesis. I think some of the folks that are diving deeper into the interconnection aspects of these facilities are likewise, I think, to some degree enabling the carrier neutral capabilities, but both themes are today competing head to head and are viable in the marketplace. I think the next wave of activities will certainly see, I think, more refinement on the PropCo side, and I think you'll see assets get broken up among parties that maybe the actual large transaction gets done as a whole, but there's more efficient transactions that come into play after the fact, where it may be a strategic that prevails on what they want on the services side or the customer layer, but ultimately also make more efficient the overall play by bringing into the equation a capital source effectively, which is represented by the REIT world, that will make the transaction a much better leverage transaction, a much better return transaction for a party who doesn't have a return requirement that is a low single digit after-tax cost of capital, but rather a much higher return on investment. So it's probably daunting for a new player to figure out how to put traditional private equity or institutional capital that's looking for leverage returns in the teens or into the 20s in some cases, to have that face off on a bidding contest for a sizable asset with a party that has a cost of capital that's so different. I think those days are largely over. I mean, I think with very few niches, you'll see that come into play. To the question more broadly about M&A, I think the data center space will likely continue to play varieties of themes. I think the broadband infrastructure space that Tim touched on, which has many layers to it. There's a satellite layer, a wireless layer, and broadband infrastructure on the fiber side as well. Not to mention a massive infrastructure of enhancing more legacy type networks as well that will not disappear overnight either. And in all of these arenas, we're seeing consolidation continuing. We're seeing the capital markets, even with today's or recent weeks' tumult, likely to continue to foster and support rationalizing in these sectors to create more efficient, more effective, and more capable players in these spaces. And I think those people who sit on the sidelines during this window will find those that did not will be much better positioned for a longer period of time. So questions anytime, happy to make a break, and we'll call on Joe shortly, but I do have a question about just continuing on the data center theme, are you seeing any noticeable trend or increased focus on smaller markets? Everybody talks about getting content out to the edge. I think you cover Akamai, Tim, so you may have some perspectives on that as well. But I guess for all three of you, is the tier 3 and 4 market becoming more of a focus, or is it really the major metros where you're seeing the most amount of investment and M&A activity? So maybe Rick and then Tony and then Tim. I'll kick off on that. I think what used to be called ghetto colo is back in vogue with effectively a new lease on life. I think the trade-off between processing power on the local basis and obviating the transport layer has crossed over. There is a real market opportunity, and it's being blessed and endorsed every day by what most notably the web-centrics and content delivery folks have been doing, which is literally deploying a lot of capacities into these edge markets, and it's given new business plans, a new lease on life with hundreds of millions of dollars, if not billions of dollars, going into companies that are deploying these edge networks or repurposing what used to be older facilities into this particular market opportunity. And you're seeing a lot of folks who had these secondary market assets actually streamlining both their marketing capabilities as well as their operations for more of these kinds of services. And it's not a tier 3 type of caliber in most of these facilities, but it's not necessary because the redundancies across these application layers obviate the need, and therefore is really creating a new lease on life for the folks that have these kinds of capabilities.
So personal view from me, I mean, and I guess I would underscore this by saying, what we do and what many of us in my business do is invest on behalf of major institutional investors and in pension funds. So the direction of that capital that you see is generally not towards the tier 3 locations. You'll see lots of investment in major metropolitan areas. And I think it's just simply reflective of the tension that exists between sort of new technology and old line real estate, right? And so, old line real estate is one where you look at major metropolitan areas, you look at major centers of population, and that's where you put a core investment, a safe investment. And frankly, a lot of those areas now are being built out. So what I would foresee, and really this is my opinion, but you sort of see this in many other facets of the real estate business is, once you reach a certain point of supply or demand in these major metropolitan areas, then you go to the tier 2s, the secondary markets, or even the tertiary markets. Will we get there with the major institutional investors? Maybe not tier 3, but I could seriously see tier 2 being stronger in coming years.
Yeah, I'm not 100% sure what the business model looks like yet. I'm not sure. I mean, there's some thesis maybe we should be combining with the towers, and you have a small data center there to store immediate, really latency, sensitive things. And even Akamai would almost like to have Akamai software in every device out there in my iPhone, and they know maybe overnight when I'm sleeping, you update what I'm going to read in the morning, right before I wake up, or they would like to have it stored on many multiple layers. But clearly, we saw a lot of problems with exchanging traffic with Netflix, and we've had to develop much more interconnection points in the network to alleviate some of those traffic congestions. So that's been happening. But generally, to your point, I haven't seen a large company, really on a public basis doing it yet.
And I would echo that last point, that this is the world of innovation right now. So you see a lot of little companies, relatively speaking, in the arena, really finding the niches where they're bringing efficiency to the equation. So you have lots of folks dozens of folks deploying efficiency, burstability capabilities to accommodate some of these idiosyncrasies, particularly keen to the content folks and the large transport folks that are doing one location to many type of deployments, and or are event driven, which tend to burst traffic patterns in particular ways and processing patterns in particular ways. I think also the bridge between legacy approaches to transport and to processing capabilities from a centralized data center, which may be the tier 1 purpose of a company, in some cases even housed in that facility, with a particular event that they're doing or launching, you suddenly find a cloud application that needs to complement that. You need a bridging capability to do that on the network side too. So in all of this inefficiency layer is the new innovation opportunity, and we're seeing a lot of folks taking advantage of that, and you're seeing some rapidly growing companies taking advantage of, in many cases, not deploying their own infrastructure, but creating abilities, whether it's through portals or through automation, which in many cases link through APIs to larger platforms, suddenly enabling capabilities to do all kinds of very interesting deployments.
So I think we had a question up front from Joe.
Yeah, just two recent telco announcements. Does the
So the question really related to kind of the telcos selling their data center assets. Is it simply just kind of a source of financing, and if so, why not sell office buildings and others? Tim, you cover two of the largest telcos out there. Maybe you can kind of take a stab at that, and then Tony is the potential financial counterparty on some of these. Maybe you can provide a perspective as well.
Well, they've done it with the towers already, and it was both financial and a little bit operational. They've done a little bit with office buildings. They would do it with central offices, I think, if they could, to re-engineer. And the networks are going to be rebuilt in very, very, very different ways. But it's very financially efficient. It's tax efficient to do with sell lease back on these. But the other honest truth is when you visit a telco data center versus someone who just focuses on data center, the focused data center operator is just innovating so much more rapidly, and it's all they do day in and day out. And I think they've just been pulling ahead of the telco data centers from a quality, capability, service perspective, over the last 5 years.
And I would say, with regard to the sale leaseback situation on data centers, certainly that's happening, but that's always happened in the office space. To a certain degree. And so I think really what you're more or less seeing is companies sort of reflect the way that they treat their hard assets on their balance sheet consistent with the way they own data centers. As far as whether that validates more movement to the cloud, that's a little bit harder to say, because I think depending on the operator or the company, there's always going to be a need for security, and the question is whether people feel secure enough to actually put their data onto the cloud, or whether they're going to want to hold it in their own facility that they know they can secure on their own terms.
If I could piggyback on Tony's last remark, there's always this tug of war debate that goes on about, hey, is this the eradication of one for the other? I actually feel pretty strongly that there is a place for a variety of different types of facilities, including the cloud layer, and I think the degrees to which flow of activity is in motion in one direction or the other may vacillate from time to time, but I think we're long from done on centralized data center capacity as well. I think the telco maneuvers of late probably is more motivated by the realization that there's not a lot they can do to enhance the physical property layer of the data center-centric services activities that they're doing. So from that realization, it is a easily monetizable asset with somebody who probably, in some respects, is willing to value it more than it is going to be valued hidden into the balance sheets of a major telco. I think an interesting observation about the most recent announcement is Verizon keeping the cloud services layer as part of their own integration or portfolio of services, and I think that's a testimony to the fact that most of the major telcos, and even some of the not so majors, are still trying to figure out the layer of services offerings proposition that is the right one for the next generation. I think many are playing out optionalities. I mean, Comcast was mentioned earlier. They are doing it in the form of partner relationships. They haven't actually internalized very many of those capabilities because their view is they don't really know the adoption cycle or the blended portfolio necessity for a lot of those services to their type of customers, which tends to be a pretty small customer at this point. So I think we're in the early innings of what the portfolio will look like for a lot of these companies, but I think you should see, as was mentioned, we've seen in towers, you'll see in more PropCo type deals. I think the colo facilities, candidly, in many respects, represent a fantastic opportunity for edge data center deployments. They're highly interconnected facilities with the caliber facilities that are well situated for some of the kinds of things we were talking about earlier. But how that all plays out, I think, is still to be determined.
But I would just add on the cloud services side, I think AT&T has shifted focus to more on their net bond and networking and partnering with cloud services and I think even Verizon with Terramark is shifting a little bit upmarket, the government, of very large specialized, cloud projects. CenturyLink is obviously still in business, but it's still very early to your point. It's not really clear how it's going to shake out.
So not to harp on this point, but I guess the real question maybe is, what was the defining event or trigger where they all woke up the same morning and said, let's knock this stuff in, right? Was it Fed moves or just a realization
That's right.
Sort of natural, we're looking at our balance sheet and, okay, this facility is productive, let's do this, or, you know what I mean? Like they all of a sudden decided to do it.
Well, they do need about $10 billion each for spectrum coming up, so that's helpful.
So the question is why now, and why is it a coincidence that so many companies are considering asset sales? And Tim brings up a really good point. Spectrum is going to be a multi-billion-dollar check that gets cut. So we do have a question in the back.
Sorry, just following up on Tim's comment about the $10 billion for the spectrum auctions. I wonder if we can get the panelists' projections on how much spectrum will be cleared in the upcoming broadcast incentive auction and the average price per megahertz pop that will be paid?
I'll take a stab at it just to give Tim a break. So I mean, my baseline projection is $1.50 per megahertz pop, and you know, in any given metro, somewhere between 60 and 80 megahertz total. So including the 30 megahertz reserve, you know, would be available for bidding.
That works out to around $30 billion. I'm a little lower than that. I would say it's going to be more like $20 to $25 billion auction. But it could well go to $30 billion. So I'm around 70 megahertz at $1.25 megahertz pop is my best guess right now.
Mm-hmm. So we did 2 questions that came in through the web interface around telcos that are related. So are there any new exciting prospects for the telcos, and then maybe related to that, do telcos have to expand their product portfolio to keep growing? And I'll maybe ask Tim to comment on CenturyLink versus Verizon versus AT&T. AT&T, it strikes me as going south of the border for some of its growth. Verizon's kind of focusing on wireless, and they're both trying to, you know, maybe make more inroads in the enterprise. But what's your take on that?
You know, I'm going to answer this in a slightly different way. I think all the new cloud technologies and software-defined networking technologies are coming out. AT&T produces $15 billion a year of free cash flow right now. I think they can reduce expenses by $10 billion a year. And if I was them, that would be my focus primarily, deploying all these, you know, new technologies. I think on the video front, though, they are trying to use DirecTV for someone like me, where my daughter at college, she just logs on and watches TV through our Fios TV and, you know, DirecTV. They're trying to create a family plan, or a family package for television, which, you know, is a reasonable strategy. I think Verizon is trying to, with Go90, they're trying to set up a platform to attract other application providers to use their wireless network and their wireline network to a certain degree. They have a media delivery network, but that doesn't seem to be working out, you know, real well yet. But we can talk about, obviously, these items for hours, and Rich probably has your view on it.
The fascinating thing about this industry is we literally could go down every one of these micro channels for a long time. There's a lot that is afoot in every subsegment of this industry. To the earlier point about you know, what's the timing of some of these actions and waves of actions, let's also not ignore the fact that many of us on this platform are talking to many of these companies about moments in reality. And late last year, when probably many of the planning cycles for data center sales and so forth, you know, there's the consumption side, which is we have capital appetite and purpose, which is profiled with a certain return profile. And we have these assets that at that moment in time we're trading at record values, premised and correlated very heavily with the interest rate environment. And we're large in scale and highly commoditized from the point of view of what they have versus what other large, similarly situated, more focused players in the industry do with these assets. And it's a bit of a common conclusion, because a similar thought process probably plays out in each of those boardrooms that are similarly situated. And some of us bankers have a habit of saying, hey, those guys have a reason to do this and they're going to do it. By the way, you have the same reason and the same, and it doesn't apply to every player, but strategy-wise, to the degree that you likewise have a big capital need and have an orientation that's similar, then you could see a similar motivation. It's not that they just wake up and they have the herd mentality entirely, but the bells go off and say, you know, all of this checks, and it makes a lot of sense to deploy or redeploy essentially capital that's tied up in an asset that you're not going to be able to do something terribly better than flipping it to people who have a capital efficient model to focus on that particular ecosystem and keep the service layer that you want, keep the customer base as you want to, integrate it into your portfolio, custom tailoring the requirement for both sides, and enabling you to go put money to work in faster growing spaces that enable you to remain competitive and keep your valuations as high as you can.
So I'm going to wrap up one final question from my side, and to kind of fold in some of the themes that we've been talking around: cloud, SDN, software-defined networking, OTT. Tim, you just mentioned it, and probably more for the two of you, but Tony, you can feel free to chime in as well. But how do you see that affecting fiber-based business models, whether it's subsea cable, metro fiber, long haul, dark versus lit? And you got maybe 3 minutes between the two of you to maybe chime in on that.
I'm going to be real quick on that. I think fiber is the next shared infrastructure. We've had towers, data centers. I think there's very, very strong demand for fiber. Fiber has to be built to new locations, to small cells, to these large mega data centers, to other interconnectivity data centers. And frankly, if you look at a Zayo, they traded at like 9 times EBITDA. The REITs, and Zayo could become a REIT over time, trade at 15, 16, 17 times EBITDA, and Equinix is at 15 times. They used to trade at 8 or 9. So I think for investors that have a 5-year opportunity or outlook, that are patient, that could be a very, very good investment.
Yeah, look, I think the REIT paradigm has its trade-off elements that you have to consider. I mean, it's a phenomenal arbitrage in a lower interest rate environment, may not play out quite as well or as effectively in a different environment, but I think to the fiber and future services arena, I think this conference in many ways reflects the changes that are happening. I mean, the participation at this event, probably from CDNs, software-defined or quasi-software-defined networks, and many integrating and interloping parties. I would also actually suggest that Tim's forecast is also the current realities, which is many of the largest deployments of fiber infrastructure, whether they're terrestrial or undersea or whatever flavor, is actually being done in some degree of syndication. And whether that partnership is with a municipality or with another carrier or a joint collection of carriers or the web-centrics or commercial customers combined with a fiber developer, I think that efficiency is going to remain the status quo, and I think the pervasiveness of fiber over the next 5 to 10 years is going to be very, very significant. That has a lot of implications for satellite players, wireless players, the complementarity between those ecosystems, and I think it's going to be a wonderful consumer and enterprise arena in terms of the enablement that's going to come with that. And all of the folks that are over the top, that many of whom are also circulating at this event, that are trying to figure out how to enable the things they want to do, are going to have a wonderful environment to do it in. So I think there's a lot of optimism in terms of how people are going to play in this ecosystem. I think the place where there could be some pessimism is anybody that's in legacy minutes, whether it's over a wireless network or a terrestrial network, is under dramatic assault. I think anyone who's in a commodity bandwidth segment of the marketplace is going to have to continue to get adjusted to the fact that that layer by itself is not going to be a layer that is going to be easy to sustain high IRRs over the course of time when the cost of capital of the players that are encroaching into it is increasingly lower. So I'm getting a big stop sign here, and
yeah.
I'm sure all of us are welcome to you to talk further or speak with you and your companies over the course of time at your leisure as well.
Yeah, thanks very much for your time. Great panel.
Thank you.
Thank you.
A very special mahalo to the 2015 PTC Board of Governors for their year-round leadership and support. PTC'16 is made possible by the generosity of the PTC'16 sponsors. Mahalo to each of the gold sponsors.
Now that PACnet is part of Telstra, it's time to discover a dynamic new global communications partner. With twice as many regional experts, expanded assets and capacity, enhanced network and service capabilities, and access to vast opportunities across Australia and Asia. Looking for a dynamic communications partner to help grow your business into the future? Bring it on.
Weekdays are for rising to the challenge. They're the days to take care of business, when possibilities become reality. With CenturyLink as your trusted partner, our visionary cloud infrastructure and global broadband network free you to focus on what matters. With custom communication solutions and responsive, dedicated support, we constantly evolve to meet your needs every day of the week. CenturyLink, your link to what's next.
Aloha. We're here at PTC TV, at PTC'16, and I'd like to introduce to you Donnie DeFreitas, who's the advisor at the PIRRC, the regulators group in the Pacific. So my name is Savi Vadia. I'm the Vice President for ICANN for stakeholder engagements in the Pacific. So Donnie, now what has been the difference, because you've been the past managing director at ECTEL, the Caribbean regulators group, and then recently you were also the regulator at Samoa. Now that you've come from the Caribbean, what do you see the difference between the Caribbean and the Pacific?
Well, thankfully, Savi, we limited to 5 minutes. Two critical areas in the Pacific as compared to the Caribbean is basically geography and perhaps level of development. The geography in the Pacific, a near flight of 4 hours is a long flight in the Caribbean. Development, we're a little bit more advanced than the Pacific Islands. So, but it's still the same: climate, people, friendliness.
Okay.
So we get in there.
So now that you're at PIRRC, what is the role of PIRRC, or how different? What do you think is why is it different from the other organizations in the region?
PIRRC is a bit of a mouthful, but it's the Pacific ICT Regulatory Resource Center. And the idea is to provide regulatory resources to the Pacific Islands, not just to the regulators, but to industry, to the NGOs, especially for stakeholder engagements, etc. So our fundamental difference is that we focus on the Pacific Islands, and we focus on providing regulatory resources through consultants, specialists, work groups, knowledge building, and generally we're focusing on that. We're a bit different to Peter, who's more on the industry side.
I think that's really great because we have a lot of other international organizations that the Pacific has to deal with in terms of providing input and being together at PIRRC, you consolidate the inputs from the region. So that's great.
Yeah, and that's critical because the Pacific has an alphabet soup of organization: PETA, PERC, APT, and they all have different niches. So we're going to focus on regulatory resources, Pacific Islands, and that's going to be our main focus. As you would know, the changes in ICANN, etc., we've been working on that. WRC, we've been consolidating and collaborating, and we offer advice to member countries on. That was
really great that we had some input from the Pacific in the ICANN process. Just moving on, I wanted to know if there is a site that you have already for PIRRC, a website that people can go to?
We used to have PIRRC.org, but we had problems with it, and we are now trying to clean it up. We have moved the content over to PIRRC.org.fj, but it's a bit of a non-dynamic site at the moment, and we're working to develop it. So you'll be hearing more of PIRRC in the future, and we'll have a website to show you.
Thank you. And so for the viewers here at PTC TV, is there some kind of work or activities that we should look out for and in terms of PIRRC engagements?
Well, the main one we're focusing on: two, data collection for the Pacific to provide reliable, accurate data. And the second one is we believe there's a need for a coordinated, accredited training program. So we're going to focus on bringing together resources from the ITU, ICANN, PETA, APT to develop a course curriculum for online training for regulators, and the key being that we are face-to-face at some point in time. Say it'd be a 2-3 year program, and every year they come together to discuss case issues, etc., rather than the ad hoc approach of workshops and dealing with specific matters.
It's very interesting, and that's great. So thank you very much, Donnie. I think we will end there. Mahalo.
Thank you very much.
last 2,000 years, the Silk Road stretched a long way to connect between the East and the West, running across mountains and rivers, nurturing friendships and ever-thriving business cooperation. As part of the story, China Unicom has inherited the mission to enable the channel of information between the East and the West, and becoming a heart-to-heart connection between people.
Are you plugged into social media? Then join the conversation online. Follow at PTC Council on Twitter and use the PTC hashtag #PTC'16. You can also like Pacific Telecommunications Council on Facebook and follow PTC on LinkedIn. PTC'16 is made possible by the generosity of the PTC'16 sponsors. Mahalo to each of the silver sponsors.
Great way to start the show.
What about you? What would you take back?
Probably a girlfriend for myself.
Thank
you very much. Thank you.
Aloha.
Aloha.
Colt provides seamless telecommunications across nearly 50 key metropolitan markets through our own infrastructure, operations, and knowledge bases in Asia and Europe. With a long-haul network connecting over 200 cities globally, we interlink your business securely in the markets that you aim to capture.
Let's join Mark Huckel as he interviews AJH Communications' Andrew Hare about technology, business, regulation, innovation, and the need to create a new global trust in telecoms.
I'm Mark Huckel. I'm advisor to PTC in the program here, and I'm really pleased to have with me today Andy Hare. Andy is a global expert in regulation around the world. His organization and his company advises more than 30 governments in countries across the globe, especially in the Asia Pacific. And prior to doing that, Andy was the regulator in Singapore, starting in 2000 with IDA. In fact, I was in Singapore the 10 years prior to that, and we kind of crossed paths right when I was leaving and he was coming into Singapore to build up the, help build up the systems and services in that country as the regulator with IDA. So Andy, welcome first of all to PTC. Great to have you here.
Thank you.
And to kind of tap your brain a little bit on where we are going in this world in terms of the trust in the networks that we're building and our utter dependency on them. The need in society to have some sort of protection around what is going on with our network infrastructure. A lot has been said in this conference about the need for greater security in data networks and data protections. There's a lot of folks who will entertain thoughts that there's too much barriers to innovation. There are folks that are concerned about cross-boundary regulation because, of course, all these networks don't operate within sovereign territory, but cross a lot of boundaries. A lot of new partnerships. We've heard a lot of people talking about that during this conference, and we just heard a fabulous panel before us about investment and infrastructure investment and that sort of thing, and just the changing scope of that in this changing environment. You come at this from the regulator's perspective and advise many governments around the world. And we can talk endlessly about, protection and private policy, data protection, and all those terms, security, kind of mean different things. But let's kind of boil this down. What do you see as the policy and the regulation being deployed globally, not just necessarily here in the United States, because that's not always the best example for the rest of the world, but being deployed globally? What's being done right and what's being done wrong right now?
Thanks, Mark. There's actually a cardinal rule among regulators, and if I could draw from Bob Pepper's euphemism, I'm a recovering regulator. Part of the mantra that we have among regulators is we don't criticize other regulators. We know what's good and what's bad, and although I have actually given a public speech about the regulator in this particular country, I wouldn't single anybody out. But when you look at good privacy policies, I'll go back, if I can, about 10, maybe 11, 12 years ago when we first started to look at the concept of what should privacy and data protection legislation look like and what should the policies be. And it was driven pretty much by the economic characteristics of Singapore, which depends heavily on multinational corporations, specifically banks, and in many cases European banks. And Europe was starting with a lot of safe harbor legislation, which would have impacted the Singapore economy if we didn't get the privacy legislation right. I hasten to add, only because I think over the last 10 or 12 years, it's been a bit frustrating when you hear the words in the same sentence of privacy, data protection, and security, and they tend to get blended, because I have a tendency to think those are three very separate things from a policy point of view. I'll get to your question specifically about who, in my humble opinion, I think countries that have done it right. But when you look at the concept of privacy, it more deals with the information, what information you're interested in protecting. When you look at data protection, you look at who you're interested. And when you look at security, you're trying to prevent certain people from getting at that particular information. So if you start to drill down a bit into the concepts of privacy, data protection, and security, you start to arrive at three fairly separate policies to approach it. I'll give you a very brief anecdote, actually, to show you some of the frustrations that I had while I was served in Singapore and worked for the Singapore government. When we first started to look at this, as I said, in 2005, 2006, it was asked that the ICT regulator, which was me, would at least chair the Privacy Data Protection Working Group. And I fought hard to not do it because I felt it was a social issue. It wasn't a technical issue. And I lost. And unfortunately, we did chair it. We used some of the components that were sitting in the government's information manual and I quite honestly would not give us very high marks back then. Since then, they've revised it. 2012, which is 2 years after I left, 2012, they came out with a Data Protection Act, and they created a commission to entrust with the protections, if you will. I have to honestly say that I think many countries do get it wrong. There is a construct that's going on, and I think there are some people in this room are probably well aware of that, that says that when you start to look at protecting information, it's not so much about the collection of it, it's about the use of it. And there was a terrific set of reports, and I use the word set only because it was 2 reports released on the same day that came out of the White House here in the United States. And I've affectionately called them the Podesta reports because John Podesta was essentially the chair overseeing putting those reports together. What I felt was powerful about these pair of reports was the fact the focus was on the use of information, not on the collection. So if you're in an economy that's keen about innovation and you start creating rules and legislation that protect the collection of information, you may be killing the golden goose. So I thought there was a certain degree of effectiveness out of those particular reports. Specifically, I'll now answer your question. Sorry for the lengthy diatribe. When we were actually looking very carefully, this is again 10 years ago, at countries that we felt were doing it right, we felt the Australians were doing it right, we felt the Canadians were doing it right. So, and we spent, as Singapore does often, a lot of time studying models throughout the world. But just to single those 2 countries out, we felt that they had really figured out what they should do and how to do it.
We had 2 questions come in already, or more coming in from you, from the audience on the web app here, and you've answered that first one there. And the second one is actually my next question. I had it on my list right now, so let's just go to it right away. You know, in a civil society, there's always a need to protect those, and many governments approach the network protection in that direction. Should regulators be protecting, let's use the words right here off the question, should they protect consumers from business?
A good question, but I think there's actually a more powerful part to that. When you look at the concept of protection, I've often thought, I use a principle, if you will. The job of a regulator should be to protect those that are incapable of protecting themselves. And quite honestly, I don't think a regulator should step into areas where markets are efficient, markets are contestable. I think it's a very, very dangerous approach to take. In this conference, I've heard there's a certain amount of reward being given for highly structuring a market, and that's what I always feared as I was part of the creation of the Singapore framework in 2000 when I arrived. But the issue of protecting the unprotected is really where, if you want to call it, rules should step in. So to the extent that consumers are incapable of protecting themselves, and when I say that in the macro sense, then I honestly think, yes, there's probably an opportunity to actually create some structure or some rule that actually protects the consumer. There is as I said, there's a keen danger that regulators have a tendency to, at least the high testosterone regulators have a tendency to really start to think, I need to create lots of rules. And I think that's wrong because having worked in the private sector for 20 years prior to going to Singapore, I realized how deeply every single rule and every single regulation has a deep cost. And for the company I work for, the cost was significant because it was a good-sized company.
That leads me to the next kind of set of issues here, and that kind of dovetails with what you just said, that, you know, arguments are often made that to have a more sustainable business models, we need to remove the government barriers, the policy barriers to innovation. Are there really barriers? Are they significant? How do you see that?
It's a good question. It's a good point to cover, only from the point of view, when I was the regulator in Singapore, 10-year stretch, we had an enormous gear shift right at the midpoint. And the gear shift was this. For the first 5 years I was there, actually with the framework being installed, the focus was on infrastructure stimulation. In other words, I used to sarcastically call it, let's have the gardens all torn up and let's have the streets all torn up. But the point was, this is a relatively small island and actually a fairly compact country. But it was felt that the infrastructure layer within the economic supply chain, the vertical economic supply chain, was actually relatively weak. So therefore, when you look at the design of what we put in 2000 to 2005, it was strictly focused on incentivizing, if you will. I know that's not a word, but incentivizing the infrastructure players. The gear shift happened in 2005. So we went from there over to what we felt was the innovation side of the market, which was the services side of the market. I remember in 2004, 2005, I was fascinated with this concept called Web 2.0. And I think I was probably among the first users of Facebook. And I don't personally use it now, but I was among the first users, only because I was curious about this Web 2.0 that was coming in. That's the gear shift that was happening. So social media was happening. There was the concept of the innovative layer of the market needed to be stimulated. And if anybody is a real historian, which I tend to like to look at the rules, it's an amazing shift that we took. Our timing was spot on because we actually caught the wave almost exactly when we should have. So it required a change in the way we did regulation. It was a subtle change, but we got exactly what we wanted starting in roughly 2006.
Is that the model you recommend now for other governments?
That's a complicated question because I don't think you could take one model and apply it to all 208 countries. As a matter of fact, I think it's a fool's errand to do that. I think what one has to look at, when you look at regulation, you really look at three parts, or actually you look at an economy, you look at really three parts of an economy. Availability of capital is one of the parts. It's very, very important to understand, is there enough capital in the market to sustain what you're trying to do? And would you attract, a small country, would you attract foreign direct investment coming into the country? So you have to make sure your regulations are not creating barriers for opportunity to come in. The second really is the political climate of a country. And then the third would be its ability to adopt changes. So I don't think you can say, we made a gear shift in 2005, why shouldn't everybody in the world make a similar gear shift? I think that's, again, a fool's errand. I think one of the things one has to look at is what's really the political will of the country, what's motivating the country, what does the country want to do? While I was there, I shouldn't say created, that's too bold of a word. I actually used a concept called regulation by outcome. And every single policy that we implemented always had with it an outcome. Now, we wouldn't sometimes share that with the industry or the market, but we always did it. What do we want this regulation to achieve? What are we trying to fix? So you start at a very lofty goal and you work your way down to what the policy should be, and hopefully you can achieve that policy. One of the outcomes that I was given actually when I first was there was to make Singapore the communications hub of Southeast Asia. We weren't at the time, but that was the goal. That was the objective that we were trying to achieve. So a year and a half later, and I've talked to some people at this conference and elsewhere about opening up the submarine cable landing stations. Remember, small island nation, so what's the obvious thing if you're going to make it a communications hub? It really are the submarine cables. By 2008, 8 years later, we were the communications hub of the world. We badly overshot our mark. We had more capacity landing in Singapore than the United States. Yeah. We were the #1 landing, but it was we opened the market up.
Andy, I want to go back to the question just before this one, and then we'll maybe end with this one. I don't need to ask my questions. The previous question was asking, there it is, policy is supposed to be future-oriented, right? And it's a very long cycle. We often hear the complaint that the regulator is behind the times, that they're uneducated about what's going on in the market, the innovation that's taking place. How can policymakers create policies that work? Great question.
That's a great question. That's a very, very good question. When I got to Singapore, and I actually try to share this with some of my client governments, and it's a hard concept to accept. Most countries are designed, most governments, if you will, are designed in such a way where you actually separate out the regulatory responsibility from the policy function. And when I got there, the policy function didn't report to me. And I fought to actually have it report to me, and 9 months later it did. And my point in doing that was I wanted to rotate people through that policy division of mine to actually understand the market. I had spent 20 years advocating to governments and regulators around the world and was deeply frustrated by how inert most of them were. They could not move at all. And so that frustration meant that once I was in a position to actually organize in such a way, I tried to make sure that, as I said, the policy function and the competition function and the spectrum function and the internet function all came in to a common person. And from a staffing point of view, as I said, we rotated an awful lot of people among those particular functions and spent a fair amount of time trying to get people from the industry and take people in my group, put them back into the industry. There are restrictions, though, unfortunately, because of the revolving door statutes that sit within the Singapore legislature.
Let's take one final question, again, coming through the web app we have here. Can policy also be creating a better foundation for competition? Obviously, that's something we've heard a lot in the U.S. How does that play out in the countries you work in?
Definitely yes, of course. I think competition, at least in my mind, is the contestability of markets. And it's the ability to have choice, and it is the desire to have fluid markets, so to speak. Policies will actually drive that. And to your specific point, Mark, the issue of other countries, let's get outside the realm of an economy as small as Singapore. It's very, very important that the issue of contestability is understood. And in non-contestable markets or sections of markets, it's very important to understand the role of the government. What should the government do? What should the regulator do? And so I've often said that the role of a regulator is, especially where somebody has got significant market power or there's an abuse of market power that's sitting in the market, the regulator actually serves as the proxy competitor. So once you've actually got beyond what your role is, you try to figure out how to actually implement that role. Quick final point, if I could. We did an assessment as I was leaving Singapore in 2010. And if you looked at the amount of quote-unquote regulation that we had on the incumbent players, Singtel, in 2000, 10 years earlier, and we assessed what we had 10 years later, we took 60% of the regulations off the books. And I felt very strongly about moving the ex-ante regulation into ex-post and the ex-post into total forbearance. They were continually sweeping those rules off the books.
Andy, thank you so much for sharing your insights with you. A delight to have you here in Hawaii, and we look forward to talking to you some more. And thank you all for your great questions. Aloha.
Thanks. Thanks, Mark.
PTC'16 is made possible by the generosity of the PTC'16 sponsors. Mahalo to each of the bronze sponsors.
An explosion of innovation keeps pushing the boundaries of what's possible. The convergence of voice, video, and data is revolutionizing how we see and interact with the world. Technical innovation can be complicated, but the changes it brings to your life shouldn't be. While the overlap in new device and media technology has fragmented businesses more than ever, Comcast Wholesale strives to streamline your journey. We're delivering solutions that remove your biggest challenges and simplify your life so you reach your highest aspirations. We see obstacles as opportunities, and we're always looking for ways to extend our capabilities to make your business more efficient and effective. Our focus? Pioneering the strategic solutions that clarify complex technology so you can connect your customers with the information that's important to them. Comcast Wholesale is united under one goal: to make the path to digital delivery easier to follow. We're committed to empowering you to do more and to do it more simply.
In this closing keynote, OneWeb's Greg Weiler discusses the opportunities for governments and private entities to connect every household, school, and health centers across rural areas.
So I start off my presentations talking about this, which is the mission: enable affordable access for everyone. It's super important. It's something which can be transformative for the way everybody in the other half of the world lives. And a lot of the people in this room are from places where connectivity is challenging, where getting into the rural areas is a very difficult thing to do. And subsequently, schools and health centers and individuals just have no options. And so it's kind of fun being back here, because I was here in 2009 and I introduced O3B. And it was a new concept back then. And people would come to me from a lot of the Pacific Islands. They say, "Oh, wow, we really could use this. We really want to, could you come connect us?" And I said, "Yeah, you're the reason we're doing it." And today, I'm really happy to see the growth of O3B. I'm excited to see that over half of the islands are using the connectivity. It is complementary to all sorts of other methods of connectivity. Many of you bring those types to the people. But it's just been a fantastic system, and it's been a fantastic thing to watch, because under Steve Collar, he's done a fantastic job of really growing that company, and I just am really proud of him and what they've been doing. So my history, a little bit about that. So I was, and some of you may have seen this, I saw some of my friends from Africa. I was in Africa helping to roll out, actually building a telco, rolling out 3G and fiber to the home. And I literally ran fiber. I thought fiber was it. It's got to be. I'd used some satellite, and satellite was slow and hard to configure and took a lot of money and time to make it work. And fiber, just once you put it in, it was so stable and it was very low latency. So I started rolling a lot of fiber and just literally doing it and building a 3G network. Of course, it sounds easier than it is, because back then, and this is 2005, you go to a place, you put up a tower, and, well, it's a lot of money to put up a tower, it's a lot of cement, it's a lot of rebar, it's a lot of specialized skill sets, and then you don't have really good power. So then you have to put in generators, then you have to fill those generators. So then I thought we'd go to solar and actually built solar-powered 3G towers. And it was really fun and had a local team and really very rewarding. And these are the places that we covered. It didn't have many people, but a lot of people would say, hey, wait a minute, there's no one there. And I'd say, no, there's health centers and there's schools and there's customs houses and courthouses and people who need things. And so that became a real lesson for me. But one of the problems that we had was we didn't have very good backhaul. All the backhaul came from over a geo satellite, and it was high latency. So no matter how fast the internet was on the ground, it would still have that big, long latency time back to London and the rest of the world. So ended up moving on and building O3B, and this is the satellites we designed and built, and they're up and running. And that's been a lot of fun. Now, to take it a step further, in a different area, in 2004, I went to the WISES conference. And WISES said, this is all these different big agencies they got together in Tunisia. They said, OK, here are the two targets. Connect all villages with ICTs and connect all secondary and primary schools. And of course, I was a young and open-minded on it, and like, great, good, you guys are going to do all this stuff. It's fantastic. So let's look at 2015 targets review. Access to the internet in any form is extremely low for rural households in developing countries. So after all that, the problem was politically you can get charged up and want to do something, but you can't mandate technology. It still is too expensive, or it has been too expensive, to reach the rural populations and bring a service that's affordable to the rural populations. So I thought about, how do we do that? How do we get all of the schools connected? Because that's the cornerstone of connectivity, because people live within 10 kilometers of a school, pretty much everywhere in the world. So if you can use the school as a community access point, you can enable connectivity for everybody. So started thinking about a terminal. How can we build a terminal that would have 50 megabits per second of low latency internet right for the school, that you could create LTE and 3G hotspot around the school, that a high school age girl could install with no tools, that she could put up, unfold, turn on, get paid something for watching it, and that because it is an open and neutral network, all the operators could use it, and she would get a little roaming fee for when they use the infrastructure she's watching. Now, the terminal is I'm not going to say the easy part, it's actually quite complex, but the terminal is only one piece of a much larger system. To make that work, had to build a satellite network around it. And so the OneWeb architecture, I was fortunate to find that the KU spectrum was available. The previous users of Skybridge had timed out, and so filed and acquired the priority spectrum rights in the KU spectrum and designed a system that would operate without interfering with the geos that could unlock that spectrum for use for which it's intended. Its intended use was to bring connectivity to the world. And so it was really important that we followed that intended use. So what you're seeing is 36 satellites in a plane, 18 orbital planes, about 1,200 kilometers, which gives us just about the right combination of latency and managing the orbital debris environment. So I'll show you a little video of how it works, in case there's it really helps to understand it. You have a gateway, and the gateway puts the link in a big, big link up to the satellite. And the satellite sends down a number of beams. And those beams go over the terminals. And as the beams change and the spectrum changes, the terminals automatically change the spectrum that they're using. Now, these chips in these terminals are really, really complex. In fact, people often ask me, what's the hardest part of the system? And I'd say that the chips in the system are the hardest part. We're able to do over 100,000 handovers a second without dropping packets. I mean, these are some really large-scale problems that we're dealing with. And so, fortunately, Qualcomm is one of our major investors, and we'll talk a little bit about the chips that they're building to make this happen, because they're experts in handover. So there's 36 satellites in a plane, and then there are 18 planes, and you'll see how we achieve global coverage. So the goal was to have a system that was simple enough for the end user that they could just put up a terminal and be done, and I'll show you some examples of where that goes. It looks big, there's a lot to it, We've really worked through all the pieces, and it's really wonderful to see actually all the teams that have come together around the world to help build this system, and all of the governments that have been so supportive of our mission. So we ordered 21 rockets because we have to get them up there. I think it was the largest rocket order ever. And we start our first launches actually next year. And then in 2018, we have a campaign of Soyuz, and we have 39 Virgin Galactic. Now, to put the 10 Soyuz in perspective, they launch on average about 15 to 25. If you look from year 2000 onwards, between 15 and 25 Soyuzes a year. So we're not putting them into a new paradigm of production, but you did have to order ahead and reserve this, because we have quite a few. So we come back to the terminal. We come back to the mission, the heart of the company and why we exist. And then I'm going to show you some other terminals. So we are a low latency system. Now, low latency is really important for user experience. Everybody knows that. But what it's also really important for is cellular backhaul. If you want to be between the core network and the eNode B, the terminal that your phone connects to, then you need to look like fiber. You need to have the latency of fiber and microwave. And it was really important that we met those latency requirements so that you can place small cells, even solar-powered small cells, integrated with LED street lamps all over the world. You just stick it there, and you're done. This one will see 5 kilometers up and down the road. You can cover roads across Australia. You can cover rural locations anywhere, and we don't have to do it. The end user, or the integrator, can go and install along a bunch of roads and create coverage, all agnostic and neutral to the carrier, so it works with any carrier. Trains, mobility is built into our system. It's naturally mobile. So high-speed internet to trains all around the world is another market, because there's a very small terminal. I don't have a picture of the actual terminal, but the Rockwell Collins terminal is only 1.5 inches thick. It's just a very small little thing about this big, and it's going very well. But we'll work with all sorts of antenna manufacturers. This is a terminal on a barn. So you just put it on the barn. You run the cable inside if you have power. You have all the high-speed, low-latency connectivity you could want, whether it's voice or gaming or video conferencing. But you also get 5 bars of LTE connectivity. You'll get in your car. You'll have a great cell quality. You'll drive away, and it will hand over to the macro cell on the hill. So for rural populations where they have trouble with connectivity, they can, in fact, build their own networks. Coca-Cola, you may know, is an investor. And they have over 25 million locations around the world where they are selling Coca-Cola products. I'm sure in all of the islands that you deal with, you have Coca-Cola. And so this is a way of empowering these small distributors and resellers around the world and enabling them to have more products to sell while also creating and stimulating economic growth for the local environment. So this is one of the conversations I've had with a lot of governments. They talk about number of household coverages covered. It used to be percentage of population covered, but we kind of have moved past that because everybody's got 90% of population covered. They cover all the cities and the suburbs around them. But what about the rest of the people when they go home at night? So coverage is easy, and then it gets really hard, right? It's 50% is easy by industry, or 60%. I was with one country, and we were talking 57% covered by industry. They're putting 17 billion euro in to cover the next 23%. And after that, it's basically impossible. Right? The cost structure just goes asymptotically infinite. So OneWeb lives here, right? How do we get all the rural populations covered? It's too expensive to run fiber, but you have to give them an equivalent performance to the fiber and cable modem. They have to be not second-class internet, but the same as everybody else if they want it, so they can participate. We're learning a lot about the rural, even in developed countries, the issues with rural populations. They're leaving the rural areas, coming to the cities when they don't have internet access. So I'll tell you something else that's kind of interesting, I think you might appreciate, is first responder. So this is a terminal that sits on top of a truck. So this is a fire truck. You're in the fire truck, you have your cell phone, it works. When you drive away and the cell tower falls down, doesn't work for some reason, the terminal actually senses the cell tower is gone. It starts up and creates an LTE bubble around your truck. So the firefighters and all the first responders will always have connectivity, even if all the cell towers fall away. Super important, as many of you know, to keep communications going in times of disaster. And this is a major point for OneWeb, is our ability to maintain assured and continuous communications. And it'll be a small terminal. Another cool aspect, again, we're way off satellite right now, is that it's a self-organizing network. When a bunch of vehicles get together, they actually create a new network, millisecond by millisecond. You can walk from one side of the network here all the way to the other, and you'll hand over from truck to truck, because for that millisecond, that's the cell network. Aircraft, this is actually not the terminal. There's actually the new terminal, which is not displayed here, but there's 35,000 new aircraft coming in over the next 20 years. We have Airbus as an investor, so we know a lot about aircraft and a lot about their needs. So we'll be able to provide very, very high-speed bandwidth on a global basis, pole to pole. We'll work closely with our partner Intelsat to ensure that we have pole-to-pole coverage and we can move between our systems. So you're actually on, when you're on OneWeb, you're also on the Intelsat Epic, and you can move back and forth seamlessly. So latency, latency, latency. I talk about it a lot. It's really, in 2009, no one thought about it, and now it's become pretty high up on people's agenda for high-quality communications. 36,000 kilometers, we're at 700 milliseconds. We bring it into 8,000, we're at 130. Fantastic. For all web activities, you're really moving into territory where you're equal to everybody else, who are able to perform all the cloud-based applications. At 1,200, we moved down to 30 milliseconds. I don't think that's enough, but it's where we are. I'll tell you why. If you look at an LTE stack of connectivity between your cell phone and the cell tower, you're going user equipment to the cell tower to the mobility management entity. And there's a whole bunch of back and forth that your cell phone does as you drive down the road and negotiates with that tower and then goes over to the next tower. And if you add it all up, the stacks of communications, 80 millisecond average. So you really fumble the whole system if you try to put 700 milliseconds in the middle. I mean, you can't have the handover of small cells or even large cells in the reasonable, seamless manner that's necessary for an operator. And remember, OneWeb is designed to be in the middle of a cellular network. We built a satellite, tested it out. Our satellites are small. You guys like satellites, about 150 kilograms each. We've got a modem board. And the modem board has those all-important chips on it. And that gives us capacity to talk to the antennas and then out by Ethernet and other feature sets into the world and into the local population. Investment, it takes a lot of money to build a system like this, for sure. And we've been very fortunate to have a board and to have investors that are caring, are thoughtful, have seen the world, and understand the impact and importance of the internet. From Sunil Mittal, who's on our board, who's founder of Bharti Airtel, which is the third largest telecom in the world. Richard Branson, who many of you know from Virgin and Aircraft and Virgin Mobile, and Steve Spangler from Intelsat, Qualcomm, and Paul Jacobs is on the board, and then Tom Enders from Airbus. So we've got a very wide and diverse investor base that includes chip manufacturing all the way into manufacturing of components, into customers, and then financial. So there's the whole gamut of investors in the system. And we announced our first, it was over $500 million of round in June of this year. So we come back to the system and what we're building. This is just giving you guys an overview of what we're doing and kind of where we are. So the question is always, as we start out, how do you enable connectivity for everyone? And the answer that we have is empower the communities to build their own networks. So OneWeb is about empowering communities, giving them the tools so they can build their own cellular footprint, they can get their own internet in all the nooks and crannies and locations. And those 2 million schools that we want to connect, that is the mission of the company to have that happen, we want to enable the people in the school to bring their own connectivity and solve that problem globally for themselves. Thank you. I think we have time for 1 or 2 questions, if there are any questions. I know, I don't know if they're texted up or not, but I'm not sure what the timing is right now because there's no clock. It just says 16:30. is it?
Hello? Question. Thank you. That was fascinating and an interesting example of one more solution for developing regions. Do you foresee the customers being in rural communities being end users, such as a school or a community, or do you foresee working through operators, providers that are already in the country, or both?
It's an excellent question. And I didn't address that, and I should have. OneWeb is not designed to be a retail operator. So people will not buy OneWeb services. The telcos, the ISPs of the country, will actually buy the services and resell them. So it'll be white-labeled retail, where a telecom operator will place a terminal on the roof, and the person will buy the services through the local telecom operator.
So that assumes first that they have an incentive to provide the service, and in some countries they're not so interested, and also the price differential between what you propose and what they mark up could be significant too.
Well, we hope it's not, but we'll work with many operators. So, and we'll also work with new ISPs. So we hope to see, to make it easy enough that new ISPs can be formed and that many operators can participate in bringing the services to their communities. So hopefully that will keep the price low where it should be. And one more, and then I think we have to go.
Could you give Armand Musi from Summit Ridge Group, could you give us a little bit of an update on the financing of the system, and also whether your success with O3B, which is now starting to lower the price of satellite capacity, is actually perhaps making it more difficult to raise money for OneWeb because the satellite capacity pricing is sort of coming down?
Interesting. Let me think about those two questions. So on the financing, we closed a round a while ago, and we will be opening another round. I don't have a date as to when it will open up, but we're doing a combination of financing mechanisms, including new equity plus some combination of debt. But we have that going on one thing. We have a new CEO, Matt O'Connell, who's leading the charge of the equity raise on that, although I'm obviously continuing to be involved. Then regarding the second question, O3B, I'm glad to hear that their success is driving connectivity. That's, it hasn't actually come up, the idea that the price drop they're creating is a problem. It's actually, it's been the other way around. People have been happy because of O3B's success. And I actually like to see prices come down. I like to see prices become more affordable. I'd like to see more connectivity, and everybody here continue to invest and drive more connectivity into these regions, because that will actually come back and pay us dividends. Because you'll see explosive economic growth as more connectivity gets into these locations, and they'll hunger for more connectivity, and it just pays and pays and pays back on itself. So I'm happy to hear that they're driving the price down, and I'm happy to see the growth of the economies where they're having an effect. So it's been positive, I think. But thank you, everybody. I really appreciate your time.
Aloha. How's the lunch? All right? Wow, time passes very, very quickly, isn't it? The events that we just have had has been really eye-opening and mind-opening, I hope, as well, in the last few days. And I thank you all again for joining us at this annual gathering. And thank you for making this event a priority as well, despite all your busy schedules and other commitments. This conference is only as successful as we make it together, because every participation and contribution is crucial. It's all about ideas, collaborations, and sharing of experiences. And in fact, I would like to add learning. When we kick off PTC'16, I had mentioned that this year's theme is reimagining telecoms, and that we will be spending time using our imagination to see what we can make of all the amazing resources now at our disposal, and to leverage the great business community we have created, which is our ICT ecosystem. I used science fiction movies as an example on how futuristic ideas can be thought up and then made into reality. In fact, to use the analogy again, we can think that of our ICT industry and ecosystem now at the threshold of a great transition between a prequel and a sequel. The building of the global infrastructure, the creation of our networked planet is the prequel. Last year, remember? It was a story about our connections, links, and shrinking of the world. Now we're writing the sequel. Now is the next stage where all this great infrastructure, innovative technologies, and modernized lifestyle, including social media, instant chatting, mobile commerce, etc., blend together to create a new story and a new plot. You can think of us as participants in the ICT industry as the producer and the directors of this sequel. But the important thing is that we're also the audiences, because whilst we are creating this future world with our ideas and projects, we will also be living in it ourselves as members of a new kind of modernized, connected society. So on that note, I wish all of us good luck with the path to the future. I look forward to working with some of you and also seeing the results of how our world be transformed in the next few more years. In closing, I wish to again express gratitude to an impressive list of people without whom the PTC events such as this could not have happened. A big thanks goes to our PTC Board of Governors and our Advisory Council's contributions and leadership. Our partner sponsors for their continuing support to make our PTC conference tremendously successful each year. All the delegates, speakers, and panelists who have shared their excellent speeches and industry insights. The program committee and the secretaries of the committees, our CEO Sharon Nakama and her team, working groups and enthusiastic volunteers who have done so much to distribute the workload of the conference and whose tireless effort have enabled us to manage the large number of contributions received from members. And of course, the members and delegates yourself who have taken part in this conference. As a final note, I would like to share that for me personally, this would be the PTC is really a great significance to me because this will be my last year here serving as your chairman. It has been a great honor to chair the PTC since 2014, and I'm thankful for the opportunity to contribute to the PTC and to our industry at large and offer whatever help I could to move all of us forward and embrace a new generation of communications. Thank you for your support all these years, and thank you again for being here with us for PTC'16. Remember, the PTC needs your involvement and participation to remain a success. Be sure you tell your friends about PTC and then encourage them to join, and let us know how you think we further improve the PTC and this annual gathering. We'd love to get your feedback, and I'll see you all next year. Thank you very much.
Now help me in welcoming Fedor Smith, President of Atlantic ACM, and Douglas Barnett, Partner, Atlantic ACM.
Thank you all very much, and thanks to PTC for yet again letting us present our awards here at the closing banquet. We're here to present the Atlantic ACM 2016 Global Wholesale Report Card Awards. We are a telecom-specific research and strategic consulting firm, and every year we do several studies to look at what customers think of the services they are receiving from carriers. This one looks specifically at global wholesale products. We have a number of different operational categories and two very significant product categories because the product categories are based on value, which combines both the product quality and price rating provided by respondents. We had over 1,400 carrier ratings from about 400 customers, so it's a very good data set, and we're here to recognize the carriers that performed exceptionally well in each given category. And to keep things sporting, we separate out the large carriers, those are with 15 billion or more in wireline revenue every year, from the mid-sized carriers, those who don't reach that mark. So starting with the mid-sized carriers, a carrier that performed extremely well last year, TeliaSonera, is our first winner, winning brand, sales reps, service delivery, network performance, billing, customer service, and data value. And we have Brendan Ives, the CEO of Telia, here to accept on behalf of TeliaSonera. It's worth noting that last year they won almost everything as well, but added network performance this year. So year-over-year, incredible performance. Our next winner, winning for voice value, is Tata Communications. And we're very happy to have Isabella Turcotte here, the VP of Marketing and Communications and Strategy, to accept on behalf of Tata. Tata has won several product value awards in the past, most recently in 2012. Now, moving on to the large service providers, those with 15 billion or more in annual wireline revenue. Our first winner, who has not been on this podium for some time but did extremely well this year, is NTT Communications, who won for brand, service delivery, network performance, billing, and customer service. And we have Brent Ducken, the Vice President of Sales and Marketing for Global IP, here to accept on behalf of NTT. Up next, winning for sales reps, we have Deutsche Telekom, who has won year over year in a variety of categories, but consistently performed well in this one. And we're very happy to have Martia van der Walt-Korsten, the Senior Vice President of International Carrier Sales and Solutions, here to accept on their behalf. The product categories for the large carriers were very closely contested. Our next winner is Verizon, who, in a tie in both categories, won for data value and voice value. And we have Lauren Love Wright here to accept on behalf of Verizon, the Verizon Partner Solutions. The first tying carrier is Telefonica, who tied for data value in a very noteworthy performance. And we have David Alvarez, the head of sales for Middle East and Africa and Asia, here to accept on behalf of Telefonica. Thank you, David. Telefonica is another carrier that has consistently performed well, winning brand, sales reps, and a variety of other categories in past years. And last, but certainly not least, in the tie for voice value, we have Orange. And we're very happy to have Frederick Duval, the VP of Marketing, Strategy, and Business Development, here to accept on behalf of Orange. Thank you, Frederick. So please join me in congratulating the winners of the 2016 Global Wholesale Report Card Awards for their very exemplary performance.
Thank you to all of our winners. Let's give them another round of applause. At this time, I'd love to welcome to the stage the lovely Sharon Nakama, CEO of Pacific Telecommunications Council.
Good afternoon. Or am I supposed to say aloha because I didn't hear anybody? Aloha! Okay, thank you. At this time, I would like to call up to the stand Stephen Ho, who kind of already shared his sentiment in thanking everyone for being, for his time as the president. But I would like to acknowledge that Stephen Ho has been a great president for PTC. You know, he is our immediate past president for 2014 and 2013. And I'm going to share with you a little custom about Hawaii. These leis that you see everybody wearing, it's supposed to be given with love. It's not only given with love, but when someone takes off their lei and gives it to someone else, it is with love, but it is also with greatest respect.
Oh, thank you so much. Thank you.
Stephen has been a wonderful president. He's been very supportive, not just he himself, but also with his company. He has been at all the meetings that we've had. We've had a lot of regional meetings around the world, and he has shown up at every single one of them. He's spoken at them. He has shared his staff with us to help us help through the logistics through all of these meetings. So I really want to thank Stephen very much for all of his support. Okay. Now I'd like to call up Tony Rosabi. I'd like to introduce to all of you Anthony, or as everyone knows him, Tony Rosabi. He is our incoming president for 2016, and we'd like to welcome him with a great aloha and an applause. We look forward to working with Tony. He has a lot of plans to help us progress and move into the future, and we're really excited for that. And we also know that Stephen, even though he is the past president, he's going to help us quite a bit as well, right?
Yep.
Okay. All right. Well, thank you.
Thank you.
Thank you, Sharon. Please welcome Dr. Elizabeth Fife, co-chair of the Research Committee, to the stage to present the PTC'16 Research Award winners and the 2016 PTC Young Scholars.
And Mark Chen, my co-chair, please join me. Hi there, aloha. I'm really pleased and happy to be here today to announce the winners of our several research prizes that we have today. Our first prize is the O.S. Braunstein Prize for the Best Student Paper. And this award was won by Marcela Gomez. Please come up here, Marcela. Yay. Marcela is a PhD student at the University of Pittsburgh, and her paper looks at spectrum sharing, and the title is Wireless Network Virtualization as an Enabler for Spectrum Sharing. And she actually did a poster that's still out there if you want to look at it, and the paper is online as well. So congratulations. Yes, I need glasses now. Been here too long. Secondly, I'd like to introduce the winner of our Research Paper Prize. Chen, make your way up. This is the Mihiru Juswala Research Paper Prize. And Chen Liu is an associate professor in the School of Economics and Management at Southwest Jiaotong University in China. And his paper is on broadband policy in China. And the title of his paper is The Decade-Long March Towards a Nation Online, The Evolution of China's Broadband Policy. So congratulations, Chen. Okay, next on our agenda, this year we're recognizing 5 outstanding up-and-coming scholars in telecom, and this is through the Young Scholar Program, and this has been instituted to help make sure that we are engaging with current issues in the field of telecom, and we have the best and brightest representing PTC in our group and in our research community going forward. So why don't the young scholars make your way up here and we'll announce you. So their papers cover a range of interesting and important topics, spectrum sharing, global e-waste, broadband access in Indonesia, online ad effectiveness, so quite this range of topics here. Okay, first up, we have Rishabh Dara, who is a PhD student at the Indian Institute of Management, IIM, in Ahmedabad, India. And his paper is on spectrum management, hot topic. The title of his paper is Advocacy Coalitions in the Spectrum Management Policy Subsystem in India. So, congratulations. Next in line here, we have Jenna Greslow. She's a PhD student at Pennsylvania State University, and her paper is on the global e-waste problem, which is growing, apparently. And the title of her paper is An Exploration into the Global E-Waste Problem, Moving Towards the Responsible Lifecycle Management of Mobile Phones. So congratulations, Jenna. Next up, Sujarwato, and he is a researcher and lecturer in the Department of Public Administration in Brawijaya University. I'm sure I mangled that. University in Indonesia, and his paper is on the internet divide in Indonesia. Congratulations, Sujarwato. Next, Fan Yang, who's a PhD student also at the College of Communications at Penn State University, and her paper was on the Internet of Things. The title is From Innovators to Power Users, the Role of Power Usage in Driving Adoption of the Internet of Things. Congratulations, Ben. And then last but not least, we have Yanwei Zhang, from my own university, University of Southern California. Fight on. Yeah. His paper is entitled "What Drives Ad Virality?" Excuse me. He's in the Marshall School of Business and has recently completed his doctorate. And like I said, from USC, congratulations. So this is our group. Thanks.
Congratulations to all the winners. Join me in welcoming Bruce Drake, member of the PTC Board of Governors and chair of the Awards Committee, to present the 2016 Richard J. Barber Distinguished Service Award.
Aloha. Good. Our Richard Barber Award is intended to recognize those who have provided exceptional service to PTC over a significant period of time. We had strong candidates to consider for 2016, and my thanks to all of you who submitted nominations. But in the end, unanimously, we selected an individual who for 2 decades has gone above and beyond for our organization. Our choice has organized, recruited for, and personally participated in successful panels year after year, often more than one per conference. And all of you here who have done so yourself will appreciate how much dedication and hard work this calls for. In addition, she established and manages a highly valued breakfast session for women at PTC. She has done all this while flawlessly providing the professional legal counsel, which is part of her firm's ongoing commitment for sponsorship. As one of many on the board who have benefited from her counsel, I can attest that she is always prepared, always knowledgeable, always thorough, and always balanced. Most irritatingly, I can add she is also inevitably correct. Please join me in congratulating our 2016 Richard Barber Award recipient, Tara Gianta.
Thanks for joining us at PTC'16. We hope you enjoy the conference and look forward to welcoming you back to Honolulu for PTC'17 from the 15th through the 18th of January 2017. Aloha. PTC TV is brought to you by PTC'16 Platinum sponsor Equinix. Mahalo Equinix, thank you for sponsoring PTC TV.